how to calculate return on real estate investment. Are you ready to invest in real estate, but you really don't know how much money you should be making or how to even figure that out? Well, in this video, I'm going to share with you exactly how you calculate your return on your investment, the calculations you should be concerned about, and the calculations you don't even need to worry about. Let's go.
Noel. Yeah, she can fix that. If you gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
In this video, I'm going to give you a real tutorial. I'm going to get right with this whiteboard and I'm going to share with you exactly how to calculate your returns on real estate investment. I'm going to share with you how I calculate my investments and how I know if I have a really good investment or if it's something I should walk away from. Real estate investing is one of the best investments. More millionaires have been created so through real estate investing than through all industrial investments combined. I literally started investing in real estate when I was broke, bankrupt, I had bad credit, I had no money. I started making money. And today I'm a real estate multi-millionaire. You literally can learn how to do this. You don't need a college degree. You don't need any fancy letters behind your name. This is some simple calculations that almost anyone can do so that you know if you have a good investment or if it's something you should not be investing in. So let's start with NOI. NOI stands for net operating income. When it comes to real estate investing, your net operating income is one of the best calculations to see if you're actually making money. So in this example, I'm going to show you how to figure and calculate your NOI because this calculation fits into all of the other different calculations and it helps you decide, is this a good investment or is it not a good investment? In this example, you are buying an apartment building. Apartment buildings are one of the best real estate investments because real estate and people need a place to live, and it's a place where you can get a lot of units into one place so you don't have to manage a bunch of different properties to get a lot of doors. So for example, say you're looking at an apartment building and this shows and has a net operating income that you don't know that you need to figure out. So in order to figure this out, you're going to have to take your gross rental income and you are going to have to subtract the operating expenses. So this is a simple calculation of figuring out net operating income. So say, for example, you had a property that was making $100,000 per year. That was the gross rental income. Okay. So say this is a, 24 unit apartment building. Okay. I love those examples because 24 unit apartment buildings are actually very popular, but in some cases, all of the units are not rented. So you have like what's called a vacancy and a credit loss. And that is usually, let's just say in this example, let's say this is $5,000 of vacancy and credit losses, meaning people that did not pay their rent and units that were not booked at all times because you really have a 24 unit and all of the units are rented 100% of the entire year. So you are going to have some vacancy and some credit losses. So in this example, let's just say it's $5,000 per year. And then let's just say your operating expenses are $20,000 per year, meaning that's what it costs you to maintain this property. Okay. So let's just say that was $20,000 per year. That's what you're paying. So you have gross rental income of $100,000. You have $5,000 vacancy / credit. That's what you're going to subtract. And then your operating expenses. So in this example here, it will be $80,000. And so in this example, don't forget your vacancy and your credit losses. So instead of $80,000, it would be $75,000. That would be what your net operating income is. So again, taking your gross monthly rents and minusing out the different costs associated with maintaining the property. This is a very important calculation for you to determine how much money you could make per year off of this property. Now, let me tell you the next important calculation that you would need to determine if this is a good apartment building for you to buy. So the second calculation that is really important that you hear about all the time is cap rate, which stands for capitalization rate. This is a figure that investors use to decide whether or not this is a good investment for them. And the calculation is basically the net operating income divided by the market value. So in this example, it's $75,000. That's your net operating income. So it's NOI divided by the market value. So in this calculation, let's just say they were selling this, because now this is the calculation that you're going to decide if you should buy this. Say they were selling this property for $750,000. We're just going to use a round number. Okay, that would be 10%. Your cap rate would be 10% on this property using these calculations. Now, 10% is a very good capitalization rate. In fact, real estate investors, when we are looking to buy, we are looking for the highest capitalization rate that we can, and a good cap rate, anything over like 7 or 8% is really good. Okay, so that means this is the amount of money that I can expect to make off of this property, and cap rate is a very important calculation for real estate investors. Now, let me keep going. So when it comes to real estate investing, these are not the only calculations, but these are probably the most important. Another important calculation would be you would want to see all of the leases that are available. So in this example, if we have a 24-unit apartment building, there should be, 22 to 24 leases. You know what I mean? You would expect that most of these properties are rented. And what you could do during the due diligence period is you would get to review all of these leases to see how much people are paying, and you could add all of those numbers up. So let's just use round numbers and say all of these are 1-bedroom apartments and everybody is paying $1,000. We're just going to use, a simple example. Okay, so they're all 1 bedrooms, 1 baths, and everybody is paying $1,000 per month. Okay, so in this example, that would be $24,000 per month that you should be receiving in just rents. And then obviously you have your operating expenses. In this example here, the operating expenses were annualized at $20,000. So you would figure $20,000 divided by 12, because again, this was an annualized number. Okay, so again, the operating expenses, you were told they were $20,000 per year. That's annualized, so you would divide that by 12. So you could figure that it's almost, $1,667 per month is what your operating expenses are for this. So you would then subtract that, sorry, not divide, subtract. You would subtract 1,667, and that would be your monthly profits if you were using that as an example. And so that is actually a very important calculation. This is your cash on cash return, because again, when you are buying an asset like an apartment building that already has tenants in it, that's already making money, these are some of your best real estate investments, because as soon as you close and you own that property, all of the money is now coming to you. Yes, you have to maintain the property and you have the expenses and things like that. But as soon as you close, as soon as the property is in your name, even if you close in the middle of the month, the seller owes you the rent. So say, for example, you closed on June 15th. The seller literally he's already received all of these rents. So literally on June 15th, in this example, he'd have to give you $12,000 in credit for the rent that he already receives. And this is one of the reasons that we absolutely love rental properties and we love multi-unit properties, because as soon as we close, this is our cash on cash return. So again, you bought this property, it's yours, but as soon as you close, the very next month, you are now receiving rent. That is a very important calculation. Let me give you one other calculation. And so last but not least, the last calculation that you will want to figure is your entire return on investment. This is something that actually may take time for you to figure out, and you may not even know what your actual return on investment is until you go to sell the property, but you can make some projections. So let's say in this example, you were going to buy this 24-unit property and we said it was priced at $750,000, and we use the example that it's making $24,000 per month. So in this case, it's actually making a lot more, and it probably would be priced much higher than $750,000. But again, this is just an example. But there's two other factors that you have to take into account. The first one, of course, was the cash on cash. So that was your cash flow. As I've mentioned before, real estate is all about the golden trinity of real estate. You have cash flow, you have equity, and you have appreciation. So in this example, whatever the amount of money that you put down, so say you put down $100,000 and the property, it was $750,000. Well, most likely it appraised for even more than that. So even if you're paying $750,000, it might have appraised for $800,000 and you only owe $650,000. So you have $150,000 worth of equity. That's actually a return that most people don't think about, because there's equity in the property. You could refinance, you could leverage that. That is money in your pocket. Literally, although it is not a tangible amount of money, it's considered intangible, and equity is a real thing. The next thing is that this is appreciating in value. So real estate has cash flow, equity, and then the third trinity would be the appreciation. So yes, you may have bought this property for $750,000, and in this example, it appraised for $800,000. Well, guess what? In 2-3 years, it could be easily worth $1 million. This is a return on your investment that is very hard to calculate in the beginning because you don't necessarily know what the appreciation will be. In many areas, properties are appreciating at 3 to 5% per year, but in some areas they're appreciating at 10 or 15% per year. And in some really, really great areas, we are seeing appreciation nearly 20% per year, literally. So think about where you're buying property. That is going to be a very important part of this calculation that I can't just show you here. So if you are looking to buy real estate, one of the best investments, as I mentioned before, are apartment buildings. Another easy way to do it is make sure that they're already filled up with tenants. That way you have property that's giving you cash on cash as soon as you close. And then the third thing that you should be looking at that is very important is what is the appreciation values been in that area. The higher the appreciation that you've been experiencing, the better it is for you as an investor, because I strongly suggest that you sell off or leverage your properties every 2 to 5 years so that you can make even more money with your real estate. Would you like help figuring out how much you're going to make on your real estate investments and how much you can change your entire life with real estate investing combined with business credit? Well, call me and my friends at 𝗏𝗏𝗏𝗏𝗏.com. We are taking calls. I have a whole team of people that are helping people just like you find out what the best strategy for them is and how they can take themselves from where they are to take themselves to that next level. Just go to 𝗏𝗏𝗏𝗏𝗏.com. That's 𝐂𝐿𝐿NOELLE.com. Literally, spaces are filling up quickly, and I have people that have dedicated to take these calls and to help you out. Just fill out the application as thoroughly as possible, and you can be on the phone with someone from my team in just a couple of days. Literally, these calls are filling up quickly, so make sure you go to 𝗏𝗏𝗏𝗏𝗏.com right now so that you can get all of your questions answered. We just want to make sure that you have all of the resources, all of the tools, and all of the knowledge that you need to be successful. This is Noelle. To your success.